I want to get your take, Dominic, on what's going on in Europe, because yields are dropping like rocks. Core country yields sinking, 10-year down in Germany, 6 bips, 8 bips in the UK, down 4 in the US. And then you've got things like European banks really exposed.
Look, Murray, we went through 2008, and whether they liked it or not, our banks were forced to clean up their balance sheet. So we're going through this period right now, but our banks are relatively healthy, and they're well capitalized. The banks in Europe particularly, they never really cleaned up their balance sheet. So they're holding a lot of this debt, and all of a sudden it's coming to roost. And they're looking at this debt, and they're going, are we going to be able to sustain it? Are we going to have losses that we didn't show on our balance sheet? Or do we have to recapitalize, issue more equity out there? So there's a lot of question marks. The banks are getting wrecked.
By the way, this is according to Reuters, guys, sovereign wealth funds could sell up to $700 million worth of European stocks.
Yeah, and that makes sense. I mean, look at what's going on. It's a slow global growth environment. We just talked about the banks, but what's also happening with the banks? In Societe Generale just reported last night. What was the driver? They were down off of investment banking earnings. Capital markets are closed.
Quarter.
Don touched on this earlier, right, with CMBS. But look at our market here in January. Not a single IPO, not one. Right? Capital markets are closed. CFOs don't want to put money to work. There's so much uncertainty, and there's an election overhang.
Such a good point.
I want to point something out about the sovereign wealth funds to put it in perspective. So these are oil-rich countries in particular that are having to sell assets. J.P. Morgan forecasts that these sovereign wealth funds would sell $75 billion in stocks around the world this year. The U.S. market cap is still almost $21 trillion. So we need to put that in perspective in terms of the overall downside to stocks because of that alone. There's a lot more
that's been one of the pressures in this market, sovereign wealth funds unloading.
And they're selling what they can. They're selling what's liquid.
Sell what you can.
Yeah, exactly. They're selling what's liquid, what's quality, what they've made money on, right? So they may be selling some real estate to what Don's talking about, too, because they can.
What about real estate, Don? In terms of foreigners putting money into the U.S. right now, what are you seeing?
More capital is coming into real estate. Look, New York City is a great example of that. Foreign capital from investments in large commercial properties, commercial office buildings, capital in terms of buying high-end condos, capital in terms of equity capital into development projects. You're seeing that in Miami. You see it in Washington, D.C., Miami. So foreign capital continues to flow to real estate, especially in our core global markets in the U.S., because they're safe, stable investments. And then these core asset purchases, as I said, more capital is going there because there are long-term leases. So income is essentially guaranteed to a degree, and so foreign investors see that as safe haven for their capital as opposed to putting it into this very volatile stock market right now.
So pricing, I mean, are we in a bubble in real estate right now, or do you think that this money keeps coming in and keeping prices up?
Well, no, I think we are in a rapidly increasing market. We have not hit a bubble yet because still the fundamentals are relatively sound. They make sense in terms of investments. And look again at REITs. The REITs stock are selling for less than the asset value. So there's a perception.
Right,
that's exactly
thrown out with the bathwater.
Yep.
And an opportunity if you're an investor.
By the way, Don Peebles, you're a real estate guy. Have you done deals with Donald Trump?
In fact, we've been looking at deals with Donald Trump, including one right now with his hotel company. Trump runs a very good hotel. So you look at their hotels; they're great hotel managers.
So you want to say anything about his business style?
Yeah, look, the Donald Trump I know is different than the Donald Trump we're seeing in this presidential campaign.
Really?
And look, he's got a very talented family. His kids are very talented. Ivanka's extremely talented, who I do most of my business with. And I think that gave him the freedom to be able to run for president, to have a good team on board.
Now, you going to run for mayor?
I'm giving it thought, and I'm looking at the field now, and I'm going to start doing some polling and marketing research. But look, I've built my business over 35 years. I'm having to get comfortable that I can leave what I built to others to run and have a job when I get back, because I'm not a career politician, so I've got to have a company to come back to.
And that's why I think you'll resonate, because you're not a career politician. Don't you agree, Ed Goeas? Real quick.
I would agree, very much so.
Gentlemen, good to see you. Thank you very much. Ed Goeas, Don Peebles, always a pleasure. Come back soon, Don, please. Ed, you as well. Thank you.